Now, here's the question. If I know that Apple is the highest weighted company in the SPY, why would I just go buy Apple? Because Apple over 10 years gave me 25. So Apple's giving me around a 24-25% return over a 10-year period. Why would I not just buy Apple? Because I'm almost getting double the return over 10 years instead of diversifying against all of these particular companies. Now, here's a person that doesn't believe in diversification. It's Warren Buffett. He's very heavily weighted. If you look at his portfolio, he's overweighted in certain companies. And a lot of people use Buffett as a standard, then they turn around and tell you to buy the SPY. Buffett's not a billionaire because he bought the SPY. That's not how he became a billionaire. He's overrepresented in certain companies because he doesn't believe in diversification. He believes in finding companies that he believes are going to dominate their space and investing very heavily in those companies. Buffett is not a billionaire because he just kept buying the SPY the rest of over the course of his life. Right? That's not why he's a billionaire. But you would have to kind of understand the market to kind of understand what I'm trying to explain to you. I'm not telling you to not buy the SPY. For many people that are retail, because of a lot of the psychological challenges that they have, the best thing for them to do, in my opinion, I cannot give financial advice because I haven't been given a license to sell stuff to people for a commission. And I have not been given a quote unquote accreditation to sell my services for people based on the hour to tell people to buy the SPY. So I can't tell you to buy the SPY, right? But in my opinion, I would tell the average person who wants to live a hands-free, a hands-off lifestyle. They don't want to be actively involved in their financial future. The SPY would probably be better for you because you don't have to worry about what's going on in an individual company. Because you're buying into the idea that if Apple starts doing bad, they rebalance it and they move another company into the highest weighted part of the portfolio. If you go build out your own portfolio, you now have to stay in tune with what's going on with that company because you have to rebalance your portfolio. You can't depend on somebody else to do it. So part of your expense ratio is paying people to balance your portfolio, right? That's part of the expense ratio. However, there is a segment of the population that'll buy the SPY, but they also will buy individual companies because maybe that individual company, maybe it pays a dividend. And they won't get the kind of exposure to that individual company that they would get if they just bought the SPY. So I know people that are going to heavily invest now in Intel because from my understanding, Intel pays out a dividend. And their attitude is that we believe because Intel is getting ready to start building a foundry, that they're going to reverse their situation over the course of the next 24 months. It does pay out a dividend. And what I'm going to do is they're going to invest heavily in Intel over the next, because they believe the next 15 to 20 years is going to be a bull market for Intel. I know people right now that have been buying ExxonMobil for 30 years. ExxonMobil pays out a dividend. So they may be invested in the SPY, but they also individually bought ExxonMobil because they want to get that dividend payment because ExxonMobil in the SPY is only 1.38. So you're not getting the level of exposure that you could get from a dividend standpoint that you could get if you just bought more and more and more and more of the SPY, because the more the SPY you get, the more exposure you get to what company, right? That should be obvious based on the explanation that if you continue to buy the SPY, you get exposure to one company more than you get exposure to anything else. So then the question you would ask yourself, if I'm going to buy the SPY and continue to get exposure to one company, well, maybe it would make sense to just expose myself to that one company. These are the kind of questions you want to ask yourself. Therefore, if I sit down with a quote unquote financial advisor and they're telling me, well, buy the SPY, it's giving you 12% over the past 44 years. Now, we talked about this is not how Warren Buffett built his wealth. He didn't build his wealth buying the ETFs, right? He buys individual companies. And you can go look at his portfolio online and see where he's heavily weighted in. But you would just ask, well, if the SPY is heavily weighted, first you got to know to ask, what is the portfolio weight of the SPY? Then once you ask what's the portfolio weight of the SPY, ask, well, if the SPY is really heavily weighted in Apple or Microsoft, right? So it's really not diversified evenly across 500 companies. It's really weighted very heavily. 14% is based on 3 companies. Why wouldn't I just buy those 3 companies? Why those 3 companies have been given so much exposure to the overall SPY so we understand that they're really driving the SPY. So let me give an example. As a trader, one of the things I look for is to find out whether or not Apple's selling off. Because normally if Apple's selling off, the whole SPY is selling off because of its weight in the SPY. right? It's rarely you see where Apple and the SPY are moving in opposite directions, where Apple's green and SPY's red or vice versa. It's rare you see that. Does it happen sometimes? Yes. Same thing with Microsoft. It's rare that you see where Microsoft and SPY are trading opposite of each other because of the weight that it has, right? And so these are the things I want you to understand. Once you become more informed, then you can ask better questions that can allow you to get the actual result, but you have to desire to be informed and to take the responsibility, as opposed to, I'm just going to pay these people and they're going to handle everything for me. And I believe that they're going to do the best for me. But this is the problem. If you don't know how you made the money, you don't know how you lost it. Just like Fred Taylor. They was telling Fred Taylor that he was making around $30,000 a month off this investment. He had no idea what he was invested in. So when he realized that the investment was false, well, even if it was real, you didn't know what it was because you didn't know what you was putting your money into. You understand what I'm trying to tell you? And that's why I'm not a fan of just having somebody sit you down and they're telling you, well, the SPY's returned X amount over the past 10 years. It doesn't mean it's going to return that this year. Doesn't mean it's going to return it next year. They can't guarantee that. They don't get paid on the performance of the SPY. They just get paid to manage your money or to sell you information, to sell you counsel. They do not get paid on the performance metric. They won't accept that because they know that they can't control the market. So if the market doesn't perform, then therefore they don't get paid. They don't get paid to work money. Most people don't want to get paid to work money. They don't want to get paid like that. Because who can control the market unless you're JP Morgan or Goldman Sachs? Therefore, many people are being brought into the SPY. It's not a negative thing because you got 12% over the past 10 years. But if you'd have invested in Apple over the past 10 years, you'd have got 25%. Right? And these, to me, are the conversations we need to start having. But the average person doesn't think this is important because why? We talked about the other day. They're so stressed out from their day-to-day life, it just makes more sense to just give it to somebody else. And then when things don't go the right way, there's nobody for you to really hold accountable because through all their disclaimers and their, disclosures and things of that nature, it's spelled out that they're not going to be responsible for any performance, right? Just like I'm not giving you investment advice. Therefore, if I'm going to be responsible for everything, I think it should probably be on me to try to figure out as much as possible about the situation so I can make the best informed decision. So that's all we're going to talk about today when we talk about should you buy the SPY or should you buy a single stock. To me, it's not an either or. Many people are invested in ETFs and invested in single stocks because it meets their return portfolio or their return expectations or the return on capital. Many people are looking to get dividends paid out. They want to get paid for owning the stock. So they own an ETF, but they also are heavily invested in a particular company that's going to pay out a dividend. It all depends on how you want to do it, but it's because they've taken that part out of their life. So many people, the way they know about sports, many people have decided to get that informed about the stock market. Many people, the way that they know about celebrity culture and what's going on with celebrities, other people have decided to learn that much about the market. And I know a lot of people that used to work like in the assisted living facilities, and they kind of work with like a higher income crowd. And one thing they talked about with a lot of the older white gentlemen is that these guys come out of like the professional space. A lot of them come out of management, things of that nature. They made it important for them to know about the market. So do they have people managing money for them? Yeah, but they know what's going on with the market because they understand this is how I got to where I got. I didn't get to where I got just by being hands off and letting everybody else run my situation for me. So as long as they have the mental ability to do that, but in their group, that's what was important. So they'll know very little about celebrity culture, right? They'll go to a sports game, but they're not fanatics about sports. They're not going to fight somebody on the internet about a sports team, but they definitely know where their money's going, right? Because that's what's important to them. So you go to a lot of these assisted living facilities for higher income people, they got Bloomberg on the television, right? They got CNBC on the television. And I know a woman I knew, she was, what do you call one of those like travel nurses, where she came into the people's homes and worked with them. And she was dealing with this older white gentleman and he was watching Bloomberg. And she asked him like, what is this about? Yada, yada, yada. And he just straight up told you, don't worry about that. That's not for you, right? Because he's already factored in, this is important to people like you. You know, you're here to do a service. People like me worry about what's going on with the financial market. So he probably most definitely has people managing his money, but he also makes it a point of concern for him to know what's going on in the financial space. Hope you got some value from it. David W. Williams. Talk to you later.